Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Guys, I am sick to my stomach. Uncle Charles is sick. I am sick. Look at his NVDA chart. Holy moly, I am sick to my stomach. I gave this beautiful trade idea exclusive to tier 2 and tier 3 members in my Discord. I wrote bullish above 440, bearish below 440. So above 440, we was going to look for longing opportunities. You know, I wrote where the levels 445, 447, 449. I wrote that I'd be more bullish above 449, which was a fib level. And I had targets up above. I had the most beautiful trade idea ever. And I only caught $2 of this move. I dropped the ball. I am sick. I am sick. Man, these contracts, man, the volatility and the IV, man, you set a little stop loss, they hit the stop loss. Whew. I am sick. But don't worry. I'm pretty sure we're going to get some more amazing trading opportunities for NVDA, especially with earnings coming up. We're going to talk more about NVDA later in the video. Timestamp is in the description below. Now, as far as the SPY goes, guys, we had 2 green days in a row. Now, last Friday's green day was only a few cents higher than Thursday's close. But technically speaking, that is still considered 2 green days in a row. And let me tell you, all month long in the month of August, as you guys can see here on the chart, we have not had more than 2 green days in a row before we start to sell off again. Can bears continue that tendency? That is the question. Can bears continue that tendency? And it's going to be very interesting to see because the context is a little bit different this time, right? Let me see. What do I want to talk? Seasonality. Let's talk about seasonality real quick. It's not a 100% sure thing. I pointed out unbiasedly when it did not track, and I also pointed out unbiasedly when it did track. And it's been tracked in more than is not. Okay, it's been right more than it's been wrong. And guys, we are here now. We are in the second half of August where our bottom is supposed to be found. Okay, usually there'll be according to this seasonality, the average of the last 20 years, a double bottom or something happens, and then towards the end of August we get that bounce, that follow through to the upside that usually leads into September. First week of September is usually choppy to consolidate that move from late August, and then a move up towards mid-September, followed by the massive correction. I'm sure the context will be a little different this year, maybe very different this year because every year is different. This is just the average of the last 20 years. So how do we use this? Well, for me, I use it to help with risk management. So whether we are bearish or not, we know that around this time, there is a tendency for the market to bounce to the upside. So if we are still bearish, holding bearish position, around this time is when we might want to consider sizing down and securing some profits and leave a little bit in there just in case seasonality doesn't play out. And you can always re-add to your winners. All right. But like I said, seasonality is what seasonality shows. That's just the average. Price action is the true shepherd. Now, like I said, we have 2 green days in a row, and we have not had 3 green days in a row all month in the month of August. And last time I checked, it's still August. Okay. So for the tendency to change, price action is going to have to confirm it. As of right now, we back tested this structure or this pattern. What is this? A wedge? All right, a wedge or a flag, whatever you want to call it. Okay, it was around 440. We hit that today. Back tested it. So was this just a relief bounce to back test a previous loss level, or are we going to continue? And we know it will continue if it clears 440 tomorrow or gaps above 440 tomorrow, okay? And above 440, the next critical resistance levels are 442. That's a fib level. 444, blue trend line here, June high, very critical level. And of course, based on the wedge here, around 445.5. Now, if bulls can clear those levels, especially 444 and 445.5, I would favor a bottom is in. It has to clear 444 and 445.5. For Uncle Charters to favor a bottom is in. All right, now, like I said, for tomorrow if 440 clears, we know the relief rally continues. All right, it's still a relief rally if it's under 444 and 445.5. If it breaks those levels, in my opinion, the bottom's in. We could go higher. All right, there is a big gap to the upside that could get filled. All right, now if bears step up and continue the tendency that they've been doing all August, then tomorrow should be a red day, right? And we know it's going to be a red day if it fails to clear 444. That will be sign number one. Bearish sign number one. Doesn't clear 440, right? Did I say 444? I'm mixing up my words. But for tomorrow, 440. If it doesn't clear 440, we know the relief rally is likely not going to continue. And we're going to end that 2-day green day like it's been doing all August. Okay? And if it does reject from 440, I will trust it if it breaks down support levels starting with 438.5, especially 437. That's not only is it a fib level, but it's also based on this white trend line that I have here that I mentioned in the last video. I said it'd be cool if you guys add this to your charts. Starting from February 2nd high to June 5th high, connecting to June 26th low, and then it's messing around with it right now. So if it can stay above 437, what we have here is a false breakdown setup, right? If it does, then the false breakdown setup holds. But like I said, it needs to break 440 to give us more upside. Now, if it doesn't break 440 and breaks down 437, that's bearish. Dead cat bounce. Back test and go. Confirming the breakdown of this wedge pattern. We could go lower. 435.5, which defended today. 434. And we go down to 432.5 and 431. All right, 431 was a pivot low back in late June. Now, below 431 is my 429.6 level. That's a 61.8 fib level. All right, I have fib level from all-time high down to October 2022 low. In my opinion, if the market drops back below 429.6, then the hopes of the bull market is likely over. Okay, there is no such thing as a bull market that is below the 61.8 fib level. That's below the golden zone. It just doesn't exist. So bulls gonna have to really defend that level if we go back and test it. So let's keep this simple for the short term, okay? For the short term, because we got some big events coming up. Who knows what's gonna happen? Jackson Hole and all this other stuff. Earnings with NVDA. Holy moly. But just let's simplify this now. Above 440 would be a recapture of this wedge. That's your trigger to go long, and it'll play it level to level. Relief rally continues above 440 with 442 and 444 in play, okay? And like I said, above 444 and 445.5, the bottom is in. And as far as tomorrow being bearish, below 437, we are likely heading lower than the last low that we had last week. All right? Stay nimble. Be prepared. Know the levels. Know the setups. And just trade it unbiasedly. Now let's move on to the QQQ. 2 green days in a row. Well, not quite. Last Friday's actually was a close lower than Thursday. So not 2 green days in a row. 2 green candles, yes, but it's not 2 green days in a row technically speaking. But it did recapture some levels. 361, that was a 23.6 fib level. Managed to close above the 38.2 fib level at 363.4. So if bulls want more upside, maybe to go back test some previous levels that they lost, they're going to need to hold 363.4 and 361 lowest. Otherwise, this breakout from today would be a false breakout and we could head down lower. So if above these levels, watch the next levels, 365, 367, 369.5. All right, 369.5 will be a tough resistant levels for the bulls to break. But if they do, we can head back up to 373 and 375.6 is very critical level up there. All right. Now, like I said, if we break down these levels, 361 especially, then today's breakout or recapture was a false one. We could head down lower, down to 358 to the 357.5 zone, gap fill, and then possibly lower down to 354.6 to 355 zone. And another gap fill around 353 and possibly all the way down to 351. All right. Dow Jones still finding buying pressure from that 342.5 level. That was a previous pivot high from May 1st of earlier this year. Still giving us buying pressure. It was also a gap and it got filled. But to show follow through on this buying pressure, I need to see 346.5 recapture to put 349, 351, and 353 back in play. Otherwise, bears seriously need to break down that 342.5 level. If they do, we're heading down lower, possibly down to 340 and 338.5-ish. All right, IWM still could not break back above this green trend line that I have here. It actually rejected. But yes, if it can do it tomorrow above 186, that will be bullish. Put in 187.2, 189.2, and possibly up to 191.4. If 186 continues to defend, watch the breakdown of the next support level, especially 183.6. If that fail, 182.2 and 180 are in play. Tesla gave us a nice bounce, back tested this trend line that I have here. Let me change the color to orange. Oh, I couldn't even pick it. Brain fart. Anyways, and then I also have another green trend line right there, as you guys can see. So to recapture and break out these levels, Tesla needs above 233. If it can do it, 235, 237, and 240.7 all in play. Okay, it needs to break above 233 to start off. All right, now if it breaks back below my fib level at 227, that could be bearish. Okay, I got support at 230 and then 227. If it breaks below 227, we're likely dropping all the way back down to 218.3. But of course, one level at a time. 225 and 223 and 221 would be in play first before the 218.3 level. Okay, Apple. It's back tested 176. Remember, 176 was a pivot high back in August. We broke it down, and now it's back testing it. And it paused right there. If it recaptures tomorrow above 176, that's bullish. Look to long with 178, 180, 183. The start of the gap is at 185.5, 188.4. And then the gap fills at 191, okay? Now, if it rejects for 176, watch for the breakdown of support. Starting with 174, 172, 170, and so on. NVDA, oh, you broke my heart today. NVDA broke my heart today. It could be a buy the rumor type of thing heading into earnings, so watch the levels. I have level at 470.5. It's currently above that. If it stays above 470.5 tomorrow, 474 would be in play. What would be next? 474, I'm gonna have to go to lower time frame. Let me see what the 4-hour got for me. Above 474, I got, 476.5, and then 478.8. Above 478.8, I got 480.4. All right, those are the levels above. Now, if it's below 470.5, we could drop back below. Support will be at 467.5 and then 464. Below 464 would be bearish, putting 461.8, 459, and then 457.5 all back in play. Please add these levels to your charts. Microsoft. If it can stay above 317.6 tomorrow, the relief rally can continue. If it break it down, relief rally is canceled. But as of right now, as long as above, there is also support, resisted at 322. If 322 can clear tomorrow, 325, 327, and 330 would be back in play, okay? But like I said, to be bearish, it needs to break down support. 319 is support and 317.6. Below 317.6, I'll favor more downside, possibly a drop back down to 313, 311.8, and maybe, just maybe, even test 307. Amazon. It managed to retest a fib level. Pink trend line here is from the higher, the bigger trend from November 2021 high down to December 2022 low, and is at 135. It tested that today. If Amazon can clear 135 tomorrow, 136.6 is in play, followed by the gap fill at 137.7. Okay, above that, I have 139, 140.6, and 142. But it has to clear 135 to be bullish. If it's below 135, watch for the breakdown of 134.5 or 133 to put 131.5 and 130 in play. Google needs to recapture 129.5 tomorrow. If it does, 131.3 would be in play. That's the flag, with 132.8 and 134.8 above that. All right. Now, if it's below 129.5, possible we could still fill the lower side of the flag, which is all the way at 125.6. Of course, support at 127 must fail first. Now, if 125.6 fail, bearish, we could drop all the way down to 122.5-ish for the gap fill. Meta recaptured a fib level here. This fib level's at 285.74. 285.74. That's the level that bears need to break down if they want more downside. If they do, 282, 280, 278.7, 274.5, and 271.5 all back in play. Now, as long as above, resistant is at 290. If they can clear that, 294 and 294, 298, and 300 would be back in play, okay? Netflix still defending and bouncing around that 1.236 fib level at 401.64. Bears need to break that down if they want the waterfall to continue, all right? Below 401.6, I'd be bearish with 398.5, 396, 390, and 388.7-ish in play, okay? Now, as far as the upside goes, there's resistance at 410. If that is cleared, 411.5 and 415 would be back in play. Above 415.5-ish, I'll be a little more bullish with 418.6, 420, 425, and 426.5 all back in play. AMD giving us a bounce, recaptured at 107 level. As long as above 107, that's a false breakdown. So as long as above 107, bullish. With 109.5, actually, I have the levels changed a little bit today. As long as above 107, I still have 109 is, all right, I round it to 109, and then 110.3, 112.8, 114.6, and then 116.3. Those are my new levels on AMD. So overall, to be bullish, it needs to stay above 107. To be bearish, break down 107. If it does, look to short with 105, 103.5, and 101.5-ish back in play, but with 100 below that, all right? Taking out the VIX, adding Palantir. All right, got this white trend line right here. As you guys can see, got a touch there, touch there, touch there, touch there. Multiple touches off this white trend line. Below it, bearish. Above it, bullish. And to be bullish and recapture it, it needs to clear and get back above 15.3. Above 15.3, 16, 17, 18.25, 19.35, and 20.4 would be in play, okay? Now, as long as above 15.3, it's overall bearish, but we need support to break down. The support at 14. If 14 fails, 13.6, 12.9, 11.4, 10.3, 9.3, and then 8 would all be in play to the downside. Okay, please add these levels to your charts if you're trading Palantir. Here is the dark pool order. Once again, if you guys watched my dark pool coverage in my last video, the weekend video, we had a lot of premiums, guys, coming in at that 436.3 level. I mentioned to be bullish above, bearish below it. And it worked out. And once again, 1.1 billion coming in once again at 436.3. Something special about that level to these institutions. But for us, hey, we're not going to argue with it. As long as above it, we're going to stay bullish with it. And we'll switch back to bearish below it. Now, that's if you're strictly trading dog pool order. I just use it to assist me with everything else that I do, okay? Now, speaking with everything else that I do, Here is the option flow, 500K premiums or above. All right. If you have access to this, you can add your filters and do whatever you want. But I'm just going to show you what the big money's doing. And it's overall bearish for the SPY, bearish for QQQ, bullish for IWM, nothing for Dow Jones, 50-50 for Tesla. That's not very helpful. Bearish for Apple. What's big money doing? Bullish for NVDA. Microsoft, bullish for Microsoft. Nothing for Amazon. Nothing for Google. Nothing for Google with the L. Bullish for Meta. Nothing for Netflix. Bullish for AMD. Nothing for Palantir. Alright guys, thank you guys so much for watching. If you want more content from Uncle Chartist, please consider joining my Discord. Other than that, have a great evening. Peace.